TGIF Warriors. Hope everyone survived this pretty wild week. For me, it was hard to get in step for me. Hello, Bob. So let's look at the winners and losers on the week. I guess you have to consider the S&Ps, the stock indexes on the weekly. Pretty good victory, although we stalled at some resistance up here near the 61.8 level. Right here, right to the button. I'm not convinced this is it, and we're just going to roll over. Maybe we pull back and have one more shot into mid-month, and then we'll see. I believe you have to declare the dollar a victor, but that too is, right back at previous highs, putting in a little tail. Could fail from here, otherwise, new highs are coming. And if you just arithmetically take the high of the dollar from last week, 97.20, and the low, let's call it 70, and you tack 150 points on top of the high, it gives you 98.70 about right in here. So, next week we should have, I would believe, some confirmation, and a lot is going to have to do with the range of the week. You have to say that the precious metals were pretty big losers this week from election night. Gold took a pretty good tumble. I thought there might be one more pop in the gold. That's looking a lot less likely, and we're almost on the verge of breaking down. Pretty negative week, inside week, underneath the 2-week off number. It's very possible this was it, and I'm not going to get one more jiggle to the upside to short. And back under 12.13. I think you have to be looking for new lows. Some people that I follow are pretty bearish. The gold stocks, which also is not a great sign for the gold. The blue chips are GDX, and actually there's lots of talk about a 16 target. That's right here. So we could be there in December or sooner. I thought we might get one more shot up, but definitely looking pretty weak. Blake was right about the yen being a beach ball, at least yesterday, and even today, although it's giving some back, still had a real nice week to the upside like the dollar did. So even with the stock market, that's a pretty strong week up there. Just a minor pullback with 2 days of negative action in the stock market and even yields, which should have been some pressure on the yen. The yields have come off pretty good. Today, yields are dropping. Show you the yield chart here. Okay, here's a 10-year. We're down 2.5. We almost made new highs. On the daily, it looks like we should, right up here. We're not confirming up here. So I'd have a hard time, shorting bonds here, but it doesn't mean that we can't, head up to new highs, 330, 335. So I have a lot of IDKs in my head. At the end of the week, I don't know. It's almost how I felt last week, not wanting to, take big positions in front of the election. But for me, it was a challenging week. I hope you guys were able to just, trade the Mo and your signals and do okay. I know there were some excellent pattern and plays from the team this week. And, on Fridays, everyone, I always think it's a good time to consider joining, at least try the trial, and then you have all weekend to navigate around the site and get used to our dashboard. Look at that. So, all right. So, we have 9 patterns in play here. So you can see it hasn't been easy for anybody. With all the action, things aren't much different than they were the way we went home last week, except for some follow through with the stock market. on this upside correction. So I leave you with do your homework over the weekend. Even I believe the Bitcoin, some of the cryptocurrencies saw some pressure this week. Bitcoin had a pretty negative day here. Let's see what the week looks like. Yeah. Sure looks like a setup for some capitulation. And look, this is what a lot of the Bitcoin bears are looking for, 2,500 or so. So we'll see. They say never sell a sleeping market, but I also have a hard time buying crypto here. Like our guest, Peter Bookvar, who said yesterday, he has a hard time knowing how to value them, even though the technology is real. Yeah, I don't know. Is $6,000 a good deal? Is $4,000 a good deal? You just have to trade your charts. And right now, that's a pretty negative week in Bitcoin. And actually, as a trader, you want to see capitulation underneath those levels. Hello, Uraz. Nice to meet you. So I'm going to turn it over to our CEO, Blake Morrow. See what Blake thinks going home over the weekend, and then Steve will be with us. I think we had a great lineup of guests with Mark Newton and Peter Bookvar and Steve Anton. Really had a nice week also with Leo Hermosa, the shirtless trader. I forgot to ask him if he trades without his shirt or
you would
he ever lost a shirt.
You would think with his name you would.
Yeah, I mean, I don't know. Maybe that's his marketing technique to attract females. What do you think?
Maybe. I guess if he
does
like
when you were a young guy, in shape, you used to like to take your shirt off on the beach, and
that hasn't happened in a few years.
I know what you mean, buddy.
Good morning.
So
I think, Coach, that a much better marketing technique would be being a shirtless trader and actually being a female. That way, you would definitely attract a lot of traders.
Yeah, you're right, Steve. They probably have at least 1 million followers on Twitter, don't you think?
Yeah, something like that.
Yeah. All right, guys. So you heard me. A lot of conflicted views. For me, wondering what you guys think going home. I see Blake's chart up here on the euro, and we're do or die at 13, aren't we, buddy?
Yeah, I mean 13 is really key support, and as you can see, we're like right, closing in on it. Remember, it was defended really big last week. A lot of speculation that China was out there on the bid. There was huge buying. I mean, and I have with my office in Connecticut, I have some proprietary level 2 information where I see a lot of the big banks and where the flow is coming through, and there was a lot of buying last week. So I'm actually quite surprised that we're as low as we are today. Following the FOMC, we've come in about the 88% retracement, 78% retracement. You notice right here, this was enough to stop everybody out, and I'm going to actually have to get rid of that.
Okay.
Magnet, the stupid magnet. What it does is when I have that magnet on, it like jacks up all my lines when I'm trying to just freehand. Anyway,
well, you should see me with my shaky hands in there.
I bet.
You've seen me.
Yeah, I have, and your technical prowess is beyond me, I tell you.
Yeah, I know. I have a school. I mentor people in IT.
I'm sure you have 0 clients, 0. Anyway,
I've had a few.
All right. Anyway, we notice how we cleared through this support here, and my thoughts are there's such big defense down here of this 113 level that we're probably going to bounce back, and I would assume that we're in some sort of consolidation phase. Whether it looks like this. If I have to just kind of draw it out for you guys, I'm going to remove these lines here in a second. Something like that. I would assume that's what we're in near term. I wouldn't want to be a seller of dollars necessarily down here after what we've seen in the commodity space. So, you know, you look at gold, gold, and by the way, gold's trading so heavy, it's ridiculous. It's just not, you know, trading well at all. But, you know, are we continuing to consolidate in gold? Look at crude. Crude, just by the way, if you guys don't know this, crude is at the 50%. Where the hell is my crude? It's somewhere around. Sorry, it's Friday, guys. You got to bear with me a little bit. Crude's at a 50% retracement of 2017 lows to the 2018 highs, and we've gone straight down. I mean, this is, and you can see this is basically an ABCD completion, roughly. You know, like, you know, take that, you know. Well, I guess we can go a little bit further, maybe to the 161% extension, but we are grossly oversold relative strength wise on the daily. Matter of fact, have we been, when's the last time we were down here? So we were down here last in 2015. So I wouldn't want to be short crude at this very moment in time. Not saying that it's not going down, because it crude actually looks like we're going to the mid 50s. Can I finish my thought? Can I finish my thought real quick?
Sure.
So it looks like we're going into the mid 50s, okay? But relative strength is so grossly oversold, and it's Friday, and crude tends to bounce on Fridays. So getting short here, or being short crude, or you know, a crude product at this point in time is a little scary on a Friday. If the dollar does pull back a little bit, crude, gold, you know, silver, we could see a commodity market bounce. And I got asked the question earlier about, you know, why is the S&P down? I'm like, well, you know, it's probably because we've had a really nice rally, you know, for the last 2.5 weeks. So we're pulling back a little bit. You know, and I'm not expecting
nice
a lot
chart of the day yesterday, Blake. And, everyone should check out the Blake's daily chart of the day. I mean, it gives you clarity going into the next day. And also, Blake, last week you said the S&P did something you were just talking about in crude, ABCD, before the rally, right? So we're getting something similar in crude.
Yeah, and again, I don't know if crude's. I think crude's going lower. I just I would assume that we might find some support here at the end of the week. You know, it's not to say it's crude's going back to 80 either. It probably will bounce, consolidate, you know, resume its downtrend here in the next couple of days. But if crude, some of the, you know, precious metals start to bounce, that could weigh in on some dollar weakness, because I think the euro has pulled back enough to a point where, you know, it might start to find that footing. Steve, you were wanting to say something?
We have less than 10 incidents in history that we had 9 consecutive days lower in crude, which is what happened yesterday. Imagine if we make them 10. I have to go check data. There might be none. And today it's the 10th.
Yeah, I'm sure there's, you know, there's incidents of that. I you know, you might want to go take a look, but regardless, I mean, crude's probably at that point, and I don't know necessarily. I know Stelios is bullish crude down here. I just wouldn't want to be short. That doesn't mean I want to be long either. That's, you know, I know I've said that a couple of times this week, and I need to reiterate, especially with newer traders listening in to this webinar. Just because I don't want to be short doesn't necessarily mean I want to be long. There's a big difference to me when I'm looking at an instrument and I go, okay, I don't want to be short here. Then the next question I get from newer traders is, well, why don't you go long? And it's like, no, I don't want to be. It's too weak to be long.
I don't want to do anything.
It's too oversold to be short here. Or, you know, and it's too weak to be long. That would be my view. Now, that doesn't necessarily mean I'm right either. You know, there are plenty, you know, people that are like, okay, I'm looking at crude at 60 and I think it's a good value, and I think it's actually going back to 65 over the next month, so I'm going to start establishing a foothold. That is, you take somebody like Stelios who is looking to be on the long side of crude. He takes a lot longer term stance than somebody like me. I mean, I'm usually in and out intraday, or I might hold a position for a day or two. But you know, there are people like Stelios, for example, that will take a position in the market and stay long or short for a month at a time, and they strategically look for areas to be long or short. So I need to, you know, quantify my thought process regarding how I feel about crude. I still think it's going lower. I just think it's probably going to bounce here sometime soon, whether it's today or maybe early next week. I think we're getting close to a level where we're going to bounce. But anyway, you know, I wanted to cover just a few things before I turn it over to Steve and Stelios. You know, I talked a little bit about the euro. I still think the euro is in consolidation mode. Nothing changed as far as the Fed goes with our outlook yesterday following the FOMC. Matter of fact, the FOMC was what I view as more of a non-event. So I think it was more maybe a positioning type of thing with the dollar. But you know, the euro is probably, like I said, it's probably going to be more consolidation. There is a talkies in our chat room. Let me pull up our chat room. And by the way, if you guys are not ForexAnalytix subscribers, this is our chat room. It's private for only ForexAnalytix subscribers. You can see there's 198 of us in here, and we are very, very active. You can see 115 new messages since 5:49. That was literally less than 30 minutes ago since I last checked messages, and these guys a lot of them are listening in right now, so you can see they're being goofballs. Oliver would be one of them. Let me get rid of this and let me pull up our pinned messages. There's a lot of options that are being expired, and that's Simon and Takis posted this earlier. This is from Forex Flow, but a lot of options are expiring today. You can see a lot of these options are expiring in the euro dollar, much higher prices. When you're talking about 113.70, 113.90, 114.10, billions of dollars expiring higher. The risk would be for the euro dollar to get closer to some of these, you know, maybe the 113.70, maybe 113.90 by the expiring at 1400 GMT. So that is, I got my GMT watch here. Right now it is 1300 hours GMT. So that expires in an hour. Is that correct? Is that correct? What time is it GMT? Steve or Stella?
Currently, mate, you want me to tell you the GMT time currently? It's 1:20.
It's 1:20. So
PM,
so
1:20 PM.
Right. So it's 1300 hours. So those expire really like an hour from now. I think that's
in 40 minutes.
Okay. Well,
40 minutes.
So, you know, we might get the euro getting a foothold up towards those areas. Anyway, I'm going to take you guys back off of here. That's our chat room. And good morning to everybody that's listening in from the FA community. So anyway, there's the euro, kind of I think more sideways action, probably near term. Cable's pulled back pretty good, and the pound's pulled back to probably this 130 area is going to be some sort of support down here. I'm not too excited about trading the cable right now. I have no real interest in the cable. There's so many headlines, and it's not giving us any, you know, it was a really clean rally out of this channel. Now I just don't really know what to do with it. The Aussie, you know, we back tested the channel today, and we came into support. I actually bought the Aussie dollar last night at 72.44, like literally 3 pips or 2 pips from where we're at right now. Hasn't gone anywhere. Futures have come down, and the Aussie has actually held up pretty well. So, and this is, by the way, this is 161% extension of the last consolidation that we saw here. You can see it's 161% extension. So we found support at it, and this is the channel breakout point. So I do expect the Aussie to bounce, you know, back. Now, I think the Aussie is going to eventually break through these highs, but we need equity markets to really respond as well. We need equity markets to bounce higher for the Aussie to break higher. And actually I know a lot of you guys have been shorting the S&P near the 618. Frankly, I still think the S&P is going higher at this point. I do want to be on the short side of the S&P, as I explained to you guys early on this week. I'm actually looking to sell closer to the 78% retracement, this 2850, 2860 level. Should we get up there? I don't know if we're going to make it up there, but that's where I've been, thinking I'd want to be on the short side of the S&P. The Kiwi still is very well bid. I know we've come off a little bit after getting overbought on the daily chart, but this is a squeeze. Market was really short the Kiwi. We've come off a little bit. I think any dip down to 67 cents, which is about 40 pips away from here, is probably going to find a lot of buyers should we make it down there. One of the better trades of yesterday was a squeeze higher out of the Canadian. The dollar CAD is squeezing higher. So a couple issues. I guess the Canadian government is at odds with the United States regarding some of the verbiage with the new USMCA agreement, and then also, thinking about what a gridlock Congress is going to look like regarding a new NAFTA agreement. I think there's a lot of concerns regarding the dollar Canadian. I know, or the Canadian dollar in general. I know a lot of traders have been buying the Canadian, meaning shorting the dollar Canadian, because of, we're past NAFTA, the new USMCA agreement, the Bank of Canada can be, hawkish again, yada, yada, yada. But, that trade has not worked out. And now we're breaking higher. So I personally, I picked up some Euro Canadian yesterday because I think the Euro is going to, get a foothold somewhere down here, and I like the dollar Canadian long, so the Euro Canadian was my natural selection, which we don't cover it on ForexAnalytix, but the guys and gals in the chat room knew about this trend line that we tested yesterday, and I bought it off of that trend line here. But I think the Euro Canadian can actually move higher towards the 151, 152 level. Now, the dollar yen has completed its, or really damn close to, you can say it's completed its double bottom, false breakdown. I think it's pretty close. Close works with hand grenades, horseshoes, and markets. I think you can say, we came pretty damn close. So what do you do with the dollar yen now that it's already tested 114? I'll tell you, I know a lot of you guys and gals are out there shorting the dollar yen and associated yen pairs, but they have not gone down with equities going lower. So if equities, God, look at gold, just getting absolutely destroyed right now. Gold is just coming unglued. Holy Christmas. Look at that. Just work through those stops. Anyway, I was going to say, and here's another problem with the yen pairs. When you got gold that's falling, that's typically pretty bullish for the dollar yen, and for other yen pairs too. And I have to say, the dollar yen has not sold off when equities have been coming down. So there's the beach ball analogy. I mean, and I had one of the guys from my office was like, "Hey Blake, is that a big head and shoulder pattern?" I'm like, "Man, it might be. This could be." And I'm not buying the dollar yen as of right now, but I mean, could you view that as a big inverted head and shoulder pattern? Quite possibly. I'll tell you, I wouldn't want to be short if we clear, or any yen pair for that matter, if we clear 114 and change. If we get above this 114.50, this thing is going to squeeze the crap out of the market. And it's not going to be just the dollar yen. It's going to be the euro yen. It's going to be the euro yen, which will break right through this trend line here. It's, the pound yen's already, trying to break out, but the pound yen's got, clears all this resistance, let's just call it 150, gets above 150. I wouldn't want to be short that. Aussie yen outside of its down channel, New Zealand yen outside of its down channel, and it's we still have a quadruple bottom that points to 78.60. Canadian yen, we start breaking above 87 yen, and this thing is going to fly. So again, I'm just pointing out some of these yen pairs because let's say stocks continue higher, let's say bonds, which you look at the 10-year, wherever they're at, where are they? Oh, here we go. Let's take the 10-year. Let's say the 10-year continues to break down and yields, scream higher. What's going to happen to the dollar yen? I mean, the dollar yen may make its way higher as well. So just be careful with those yen pairs. I've tried to short them over the last couple of weeks, and been pretty unsuccessful doing so. Matter of fact, if I think about my month last month, how crappy it was, I was basically flat last month, where usually October's I have a blowout month, profitability wise. I think one of the things that held me back last month of not making money, because I actually had a flat month last month, in October, I think a lot of it had to do with trying to be short some of these yen pairs as the market was going down, and they just were not going down. So if they're not going down, the risk is that they start breaking higher, especially if equities, get some sort of, have some sort of reason to break higher as well. So with that being said, we got producer prices coming up in just a few minutes. I want to pass the baton to my colleagues Steve and Stelios, and I want to thank everybody who's listening in. For those of you that are listening in, make sure that you join the Forex Analytics community, but more importantly, that if you are not, even if you're not a Forex Analytics subscriber, but you want to be, make sure you join our reimbursement program, because if you join the reimbursement program and you're not here in the United States, you can actually get Forex Analytics partially paid for, or maybe even possibly all the way paid for, depending on your broker. So if you want to join the reimbursement program and try to get Forex Analytics for free, click on this link. I'll put it in the chat box, and talk to our partners over at Forest Park FX. They are our sponsors for this webinar, and you can contact them right here. There's their contact information, Skype or email right here. All right, guys, I'm going to pass it over to you all. So thank you all for being with me, but make sure you stick around for my colleagues. So Steve, Stelios, it's all yours.
Have a good week.
Blake.
Thanks, Coach.
See you later, mate. Thank you.
Thanks, guys.
Okay.
Hi, Stelios.
Hey.
Sounds
Hey, Dale,
like sounds like a condition. I have scoliosis today.
It's a very good condition, right?
Yeah, absolutely.
I'm glad I caught it.
We have numbers in 1.5 minutes. Meanwhile, let me just mention a couple of things, Steve, if I may.
By the way, of course you may. I will insist that there is a chance, I'm going to confirm a little bit later on, that we have had no incidents in history of 10 consecutive down days in crude.
I think I read somewhere this morning that it is a record. So I think you're right.
Okay. Yeah. Okay. Because I knew for sure that we had less than 10 incidents, that we had 9 days down. So that on its own gave me quite the confidence that if we've had in the past 10, it would be at most like 1 or 2. Okay.
Yeah. Okay, in a few seconds we'll go PPI, but before that, I want to mention we had Norway CPI this morning, came in at 3.1% versus 3.4 expected. So it was a miss, but still way above target, and it's been above 2% for over a year now, I think, or something like that. So even though it ticked down,
the only issue there is if they're not hiking with 3.4, why would they do if it's slowing down?
Well, they hiked the last minute, right? The last meeting, right? So
but I mean, they kept rates for like a huge amount of time, despite and now even if they're seeing inflation slowing, I'm not saying they should be doing that, but now they have an extra excuse to use to
perhaps,
to take it easy.
Perhaps.
Yeah.
Okay, so we have PPI coming out right now.
Let's see what we get.
It is 0.6. Oh, that's strong all across the board.
Oh my God! We expected 0.2. Do I remember right?
Yeah.
0.6 is, whoa, that's massive if that's the case.
Yeah. Year on year,
Yeah.
2.9%.
Yeah, here 0.6. So it's actually triple score in on the month of October, and definitely tariffs will have started affecting that, right? There's no question about it.
Absolutely. It's actually funny. The market's not doing anything.
Nothing. Yeah, that's what I'm looking at the dollar index here at the bottom right. I'm looking at the euro here at the middle of the top. S&P, everything seems to be completely frozen, like nothing happened. So
That's
PPI
weird.
2.9 year on year, expected was 2.5 year on year. The last reading that we had was 2.6. So the market was expecting a little deceleration in the year on year PPI. Instead, we got quite a decent acceleration, almost at the 3% mark. Okay, that's quite interesting. Actually, definitely the tariffs play a role at that. There's no question about it, because especially having to do with products that used by manufacturers. Imagine what quantity of those comes from China, right? In many of the industries. For example, I know as a fact, since I have a friend that's a very high executive in Lifeng, which is one of the biggest manufacturers of textiles, that they supply like huge amount of, let's say, the US brands or whatever. So that's only one example, right? So imagine how many of the materials that the companies use, that American production companies use, come from China. So definitely the tariffs are going to be affecting that, and that's going to spill down to the consumer at the end of the day. There's no alternative to that.
Yeah, absolutely. Okay, the other thing
they're killing gold.
Let's have a look at it.
Metals are underperforming for sure. Again, any excuse to sell metals, it looks like.
Yeah.
So the other thing we had before we go into the markets, we had some UK data today. We had weak business investment, but on the other hand, GDP came in line at 0.6% quarter on quarter. That's the highest reading in quite a few months. And industrial production, manufacturing production, both came in higher than expected. And also trade balance was still about 10 billion, deficit, but still a smaller deficit than expected. So overall, UK data was possibly on the strong side, and obviously we ignore any Brexit headlines because all this twinning.
Yeah, and business investment is one of the few indicators that somebody would really expect to rebound strongly once the uncertainty has gone away. So because a lot of businesses have put any expansionary plans on hold until they actually know what they're dealing with. There's no question about it. And that has already hurt the UK economy. And the longer the uncertainty goes, of course, the longer the economy is going to be on hold on several aspects due to that. Okay, anything else that we had, Stelio?
And just a last thing, which is more of a joke than a news. We had some comments from Italy and EU again, and apparently the EU officials are saying that the estimates of the Italians in terms of their deficit, the budget deficit, the proposed budget deficits are too high, and the Italians are saying that the Europeans are a bit too conservative. It makes me laugh because they're trying to estimate something where 0.1 or 0.2 either way, they think it's a difference. They have nobody knows where it's going to be, right? So 0.1, 0.2, who cares is the answer really. So yeah, I was reading those and I was thinking, what are you trying to do, to estimate something within a 0.1%? You can't do that, no matter who you are. So that's about it.
It's, for the EU, from the side of the Eurozone, it's a matter of principle. And I'm pretty sure that they're very, very, very afraid that the Italians will anyhow try to overshoot whatever is the initial plan. So I think that that's the reason why they're putting much pressure on that, because I believe that they're betting that no matter what they initially put on the table, if there is any deviation, it's definitely going to be to the upside, right? So they're taking that into account as well.
Yes, yes.
And I can't blame them personally.
Okay, that's it for me, my friend.
Okay, Stel, great. By the way, speaking of crude, and since we were talking about it before, I got triggered, my second quarter today at 59.48. If you remember, I had set some specific targets here, and I want to buy another quarter at 58.70. This is what we drew. I don't remember when we did that, so I'm expecting that crude should have some kind of a reaction sooner rather than later. And I've started building a position. I now have half a position with a cost average at 63.95, and personally, I feel absolutely okay with that. I think that crude should see some kind of a rebound. The only thing that's a little bit worrying is that the DSI, despite having seen this horrific month that actually took us from a very nice confluence of resistances up almost at $77 down to less than 60. So this has been 5 horrific weeks. I mean, the US oil has lost almost 25% within, let's see exactly, within, so let's even use the magnet. So we've lost, so far, we've lost within 27 trading days, otherwise 37 days in total, we've lost almost 23%. So that's an amazing.
Isn't it crazy? There's no specific reason why it should have had that run here, right?
There's
no reason.
I believe, and if you remember, that was one of my excuses for actually selling crude, and I made a great trade, in the previous month being short crude. I believe, Stelio, that it was a trade-off between the Saudi Arabia and Trump.
I understood. Yeah. With the journalist. Yeah. Okay. Understood.
Exactly. To let go of the journalist thing and not give them any more sanctions. You know something? It brings my, and then I'm going to go back to charts, I promise. But it's really, really funny because Trump, after they made, in my opinion, it's more than certain that they made a deal under the table. And you know something? Trump did the right thing, in my opinion, having to do with the Americans. And, I've criticized Trump about many things, but as I've said, I'm not a Republican. I'm not a Democrat. I'm a Greek guy that doesn't vote in the US. So I have no problem saying things, exactly as I see them objectively. That doesn't mean that I'm always right, but it means that I have no bias. So, I'm trying to be objective and, make assessments based on what my logic says. And I have no stakes in the game. So, I said several days ago that if this is what Trump did, good for the American people. I mean, that's one type of a negotiation that, of course, somebody can say, you shouldn't be selling off your principles for a gain. But having to do with the average American having lower oil prices is definitely something that's helping a lot along the way. Yeah.
Sorry, I was going to say there is one problem. The swing producers and the reason why oil fell off a cliff after 2014 was shale, right? U.S. shale was leading this.
Yes, absolutely. You're right about that.
Shale producers, I read over a year ago, from what I remember, if you put in extraction costs, taxes, everything in, they have a break.
They have a very high cost. Yeah.
It's like $45, $50, something like that. So we know that there's a floor there. And if you saw the big sell-off in 2016,
it stayed below.
It stayed below $45 for about 5 months, and then it went straight back up. So
of course,
and remember, shale producers, they're highly leveraged, so they cannot withstand for a long time running losses, not like the Saudis. So I think we have a natural floor around.
I agree with you, Stelio. I totally agree with you. And I don't think that crude is going back to 26 or to 30. There is no, in my opinion, there is almost zero chance that's going to happen, especially given my long-term outlook for the dollar, which I know that that we shared. But I wanted to say the following. Trump then used as an excuse the fact that, I didn't want to put sanctions on the Saudi Arabians. Why? Because sanctions are in essence a tax to the consumer. He's 100% right. Question: why are tariffs any different? They have a different name, right? They're called tariffs instead of sanctions, but they have the exact same effect, 100.0%, the exact same effect. So he has no problem saying that he doesn't want to sanction the Saudi Arabia because that in essence would increase the price of crude, and that in essence equates to tax to the consumer. But he has no problem doing the exact same thing with multiple products that the US consumer actually needs, either as part of the final product that they buy, or outright as a final product. So it's very weird, because in one case, theoretically speaking, he's looking at the longer term to make a deal that a more fair deal, as he says, or whatever. What I see so far is that the merchandise trade balance, I don't know if you saw that, Stelio, the merchandise trade balance for September, for example, was the largest one the US has ever had in its history.
Oh, wow, I didn't see that.
Yeah, so I hope that he believes that at the end it's going to be worth it, because judging by the numbers, so far the US is horribly losing the trade war. Horribly. I mean, the numbers are much worse than they were for Obama or any of the previous presidents, having to do with the trade balance. So far the US is winning no trade war against China, I can tell you that much, and numbers don't lie. Anyhow, let me see if we have any questions so I can look some specific things. Can you please have a look at? Yeah, we can have a look at those perspectives. The palladium platinum ratio breaking out of its wedge looks bullish. Okay, that's a little bit. That's a little bit of an out of the box thing to ask for, but I'm very curious since you mentioned it. If you see, I've looked at it in the past, but okay, this is the palladium platinum. Yeah, and it definitely had a leg down, but I can tell you one thing for sure. Unless you see it break this floor here, it's a no-go. But yes, if we do break below the 127 ratio, I think that there is a good potential for platinum to actually finally get a relief rally, against palladium. Because if you see, this uptrend has been very, very well established. I mean, just look at palladium. Palladium used to be like 0.18 of platinum, and now it's actually worth quite a lot more. Actually, we reached almost 1.4 just a few days ago. So, what's this horizontal support area? If we break below it, yeah, I think there is a very good case that we might be going quite lower from here. I'm guessing that when you mention a wedge, probably you're looking at something like this, which can be the case, or you're looking perhaps something like this, most probably, even better. Yeah, you're right. Can be a wedge, but as I said, confirmation in my opinion, this horizontal support area, then it's worth it. And if somebody is wondering, by the way, just for educational purpose, if somebody's wondering how the hell am I going to trade this ratio, the answer is very, very simple. You're going to be buying the same amount, the same worth of platinum as you will be selling palladium. So you can make this trade synthetically, as we say. Okay, you can be buying platinum and selling palladium, both of them against the dollar. So in essence, you create a synthetic trade, being long platinum against palladium. If your broker, of course, offers both of those metals. So I wanted to show the DXY before we move forward. I really have nothing more to say about the S&P. S&P backtesting now previous horizontal support resistance area. So I wouldn't be surprised if we found support here and we moved higher once again. You know my outlook for that. I do believe that the corrective move lower, despite this sharp rebound, is not over yet. So I'm building a short position as we move higher because I feel quite confident that we should at least revisit the 2690 area. So I'm not going to revisit the indices. You can, you can look at yesterday's recording if you weren't here or the day before yesterday, because not much has changed. So I don't need to go through every single index because, as I said, nothing has changed other than that. Now, having to do with the dollar and what's happening here with the dollar, there is obviously, this is what I drew several days ago, there is the potential that this is an ascending triangle, which definitely will be bullish. If we break above the 9720 area, I think that then we're targeting the confluence of this horizontal support resistance area and the 161.8% extension of this corrective move lower, both of them roughly at 99. So I think that the break above 9720 and daily close above 9720 targets 99 most likely than not. Of course, before that, we have the confluence of resistances at 97.82. But my gut feeling tells me that if we break this formation, we're not going to stop so soon at 97.85, although it is a level of interest, undoubtedly. I think we can easily make it to 99 before then looking for a much, much bigger pullback. I would love to see dollar push, up there.
Great look.
I would gladly be in the short side up there. And speaking of which, Coach,
there won't be $1 bear left up there, Steve.
Oh yeah, that's one case. And you know something else, Coach? At the same time, we might see USD yen push this confluence of resistances, right?
Yep.
Yeah, and in this case, there might not even be any USD yen bears left on the table as well.
Yeah.
So that's
I'll be gone.
So yeah, those two can happen, at the same time. Now, having to do with metals, and now let's go back to our more popular metals like gold and silver. If you remember when we tested this channel, I said that listen, and then we saw 2-3 consecutive days lower. I said that listen, there is a very good chance that we might have topped, and this might have been like an ABC recovery. The bullish case scenario is that we might be building like a little triangle and we might push once again higher. But as I said, and I kept saying that for weeks, my barometer is silver. Yeah, silver. And silver, it's too early on the day, of course. Silver seems to be probing below this horizontal support area. And in all honesty, if I see silver close below 1420, I think that the chances that actually gold has topped, despite the fact that it will not have broken below its ascending channel yet, are extremely high. So I'm watching silver very carefully because silver never followed the kind of rebound that gold had. This is so far a textbook triangle, and triangles are continuation formations. And I wouldn't be surprised. Actually, I would be surprised to see anything else than a continuation lower, in which case, as we said some days ago, I don't remember which day it was, I doubt it that retesting 1390 something is going to do the work. I think that this case we might actually slice through it and test a 127% extension, which also would bode quite well with the possibility of the DXY punching through the 9720 level and making it to the 99 area, in which case I think that euro will also not have held. In this case, I think it will have made it at least at the 61.8 of the move higher, which comes at 111.86. If not lower than that, there is another horizontal area of support if you go back at 111.30. So personally, I believe that, since we know that seeing triple bottoms, triple tops, quadruple bottoms, quadruple tops are very, very, very low probability scenario. An exemption to the rule is what we saw in the Kiwi yen. Very rarely you're going to see a quadruple top or bottom actually do the work. Usually, if it doesn't create a double bottom or a double top, the third test is going to be fatal. It's going to be the test that actually breaks the straw that breaks the camel's back.
Steve,
Yeah.
if we break 113, the range has been 500 pips. Takes it down to 108. That's where I think it'll be if the dollar index goes to 99. And
That's also a
78.6
possibility.
back.
Exactly. It's 78.6 back. And as you see, also just a few pips lower, horizontal support resistance area once again, right? So, yeah. If we do break this 111.30 to 111.80 area, I think that the next area of actual interest is the area between 108, 1082, somewhere there. So I totally agree with you.
You put the whole jigsaw puzzle together. It took the end of the week to do it, didn't it?
Yeah, but we need confirmation first, right? Don't forget that.
Yeah,
so
great job.
I doubt it that we're going to get confirmation today. I doubt that we're going to see, that big of a move today to actually get breakouts and close the week in breakout territory. You never know, of course. With trading, you can never be 100% sure, but I doubt it. So I think the next week is going to be crucial. It's going to be critical for what happens from there. Let me read a comment. We have the Russia OPEC meeting next week, probably aiming to keep the WTI oil price around 70. But on the other hand, Saudi needs to please Trump. I agree with you 100%, my friend. And keeping the oil price low may be a way for them to pardon. The Saudis are also considering an OPEC breakup, according to CNBC. In addition, the OPEC overproduction and the watering down of Iran sanctions are also oil price negative. I totally agree with you. That doesn't change the fact that even if the trajectory of crude is lower from here for a period of time, I do believe that perhaps, as you said, the Russia OPEC meeting might create that. I do believe that it's due for crude to produce some kind of a rebound. That rebound can very easily be $3, $4, $5. So there will be some money to be made during that rebound before actually seeing a continuation lower. In general, as a general rule, when you see events that never have happened before, like 10 consecutive days lower, usually that's an indication that the bear trend is quite strong here. So after seeing this kind of a move lower, 23% lower within like a month, yes, I would be treating any rebound as a corrective one. And I do think that this broken confluence of supports, roughly at 63.60 to 64.40, that area can easily act as the resistance once we revisit it. So that's the area I would be looking to take profits in case of a rebound. Coach, did you want to say something?
Oh, no. Are you hearing me breathe?
Oh, yeah, sorry. I thought you were about to say something and you just didn't want to interrupt.
Okay.
By the way, Andre, are you with us, mate? So we can, I bet Andre has some. Do we have an interview today, Coach? I haven't checked so far.
No.
Okay, that's perfect because it gives time to Andre. Okay, then Andre, just confirm in the chat that you're here or in Skype. Okay, you are perfect. So since we have no interview, we have a few more questions. I'm going to cover them and then it's all yours, my friend. I'm going to pass it to you, okay? Since we have no interview. So we have a question about the Aussie CAD, and about the Aussie CAD, we haven't visited that in a long time. There are two things. Actually, look at this. It's amazing. It's amazingly nice how it has played out. Actually, we hadn't watched this in a long time. Last time we had a look at it, we had broken below this horizontal area of support and this ascending trend line. And I said that, it has a lot of downside. And look at it, we tested this trend line support, and this is a very, very nice rebound so far. It looks impulsive to me, but there is no question we're currently testing strong resistance. So I would definitely not be buying up here. If you want to be buying, I think that you should be waiting for a pullback before another leg higher. So if you want to, some kind of a short-term exposure here, I think in the short term, a pullback roughly from anywhere between here 95.60 and 96 is a good area for a pullback. But I think that there is more upside. I think that the move higher is not done yet. Even if it proves to be corrective, I think that this correction is not over yet. And don't forget that we are in a much broader range. You can see it here between these two trend lines. So there is no long-term trend in the Aussie CAD, and we are once again approaching the middle of this huge range. Okay, so depends on what kind of time frame I gave you. An outlook for the vast majority of the time frame, so you can treat it any way you feel like it. And we also have a question about the pound kiwi, and here is the pound kiwi. We said the other day here that this rebound looked corrective. We did indeed push to new lows. We're now testing this this ascending trend line support. It was the symmetrical triangle support. We almost tested it once again. I think that there is no risk reward to being short anymore these pairs before seeing a big rebound. So I think the move lower has been strong. I think it's probably not over yet, but before re-engaging to the downside, I would be definitely looking for some kind of a rebound. I don't think there is any more in any of those pairs. If you see the pound kiwi, if you see the pound Aussie might actually push lower once again before higher. Same euro Aussie, euro kiwi. I think big part of the first leg lower has been already done, has been already completed. So I would be a little bit careful. I would rather short on strength than trying to chase weakness, after so many days that they have already remained weak. I have a question about the USD CAD. USD CAD has broken out, actually. I kept telling you about it, that eventually it might break out from here, and it seems to be doing so. And I think that if we close above 130, 160 on the weekly, we're definitely on our way to 133 next, if not higher. If you remember, I warned a long time ago that I view this move lower as corrective. I don't like the momentum higher so far. That's why I haven't actually engaged in this position. But one thing that I made clear is that I wouldn't want to be short the USD CAD, because this move lower has all the corrective characteristics that you would expect. Okay, so 133, 134.20, anywhere between there. We might even make it all the way up to 136, right? 136 soon enough is going to be also confluence with this ascending channel resistance. So if we close above 130, 160, that is definitely a bullish development, especially once we do it on a weekly closing basis. Now, the last question about the USD-TRY. USD-TRY has had a very healthy corrective move lower, but I do view this move lower as corrective still, and I do think that it's going to be hard for it to make it below 485, 490. That's going to be a nice area to be expecting more upside to follow. Now, if you remember, Coach, I was talking about the emerging market in this
at the bottom.
Here at the bottom, we broke out of this wedge, but we haven't cleared the channel yet, right?
Well, if we're going to 99 in the index, buddy, that'll be the real test. If emerging markets do not make new lows,
I agree with you.
Time period.
I totally.
Then I think you really got a green light, a very bullish setup.
I totally agree with you. I mean, if the dollar moves higher and we don't see a new low, and we see something like this here, and then we make it up here in this confluence, and then we actually finally break higher, I think that's going to be a very, very bullish signal for the emerging markets. And I'm really happy that I heard yesterday.
Likes that too.
Yeah, Peter. I hold him in a very high esteem. He was
talking about the debt, the emerging market debt. He likes even more.
I totally agree with that. And if you remember, my thesis was that a lot of people believe that there's going to be flight to safety in the dollar when we have the next crisis. But as I've questioned it many times, I'm not saying that this is like the most probable scenario, but I think that the market believes that this is like almost 0% scenario, while I believe that it is a very decent probability scenario, which is what? The market's losing their faith in the dollar. The same countries that were actually during the previous crisis that were running to come to the aid of the dollar and beat it up from the 70s, because I remember that the DXY was down at the 70s. The same countries that were trying to beat up the dollar down there, I think that in this case might not do the same thing, might not try to beat up the huge issuance, the trillions, at least 2 to 3 trillions of issuance of new debt that every year the US is going to have while it's going to be in the next recession, whenever that is. In my opinion, that's going to be within, like, worst case scenario, 2020. I've said that many, many times. In that case,
that would also imply, Steve, that a softening of the Fed stance. I think that if we get that sell-off in equities that you're looking for, and the Fed blinks, that's going to be the top in the dollar, bottom in metals, huge commodity rally, and eventually even a stock rally.
And let me make another prediction. I think that when the Fed blinks, the markets are going to tank extremely strongly. Many people believe that when the Fed blinks, the markets are going to be relieved. Okay, Fed is coming to the rescue again. I believe that when the market blinks, the markets
confidence goes.
Exactly, because it's like, okay, theoretically there was a plan. It seemed to be working during the recovery. Theoretically, that plan had a follow-through of how to reverse, and as it seems, we can't reverse, which means...
You ever notice, Steve, that in the word confidence, the first part of it is con?
Yeah.
Okay.
What is a wonder is how the first part of the Federal Reserve is not Ponzi, but that's a different story.
Yeah.
Because if you think about it, what the central banks have been doing in a small part since the 70s, but in a much bigger part during the past 20 years, is no different than a Ponzi scheme, literally. I'm very sorry to say that as an economist, but it's really not different. The only way we treat it as being different is because it happens on a state level. It's because the issuer is the highest authority. There's no other reason why we're not treating it as a Ponzi scheme, right? Anyhow, let's find Andrea.
The whole world is set up that way right now. It's not limited to any one country. China's doing it. Europe's doing it. Asia's doing it. Everyone's doing it.
I know one thing for sure, Coach, and I know that you've been in the markets for
too long.
Many years.
90.
And yeah, you've been in the markets for many years. And if you know something, is that there isn't a single time that this time is different has played out, right? There isn't a single time in history, not even one.
Solomon, there's nothing new under the sun.
Yeah, so I do think that this will have its natural end as well. Now, what's going to follow, I'm uncertain, but this is going to have an end as well. Hey, Andrea, welcome. Welcome to the company. I've already passed
very much. So eventually, let me make a suggestion. Dale, make an interview to Steve. I believe there are a lot of people interested to know about the background about Steve's lives around the market.
I interviewed him on FX Street. He told me. I just don't remember.
Yeah, I don't. You know that I don't follow the fundamentals. That I don't have the knowledge that you guys have to provide people with those analyses. But I'm completely amazed when I start to listen to Steve, and I sit above my hands and just listen.
Yeah,
nothing more.
he gives the best review of the board.
Oh
You know,
yes, for sure.
I've been around for a long time, and really, if you're, have zero direction, you don't know what's going on. If you just listen to Steve for his 20-minute review of the board, he puts the whole jigsaw puzzle
take your
together.
breakfast. Take your breakfast with Steve, and all go fine.
Okay,
Everything
now
goes.
stop
You're
it,
not
because
bad either, Andre.
I'm blushing. So stop this and start.
Yeah, you're not bad
Oh,
either,
it's
Andre.
awesome. It's awesome, Steve. Thank you very much for
All right, buddy.
Well, sorry.
So someone's calling you to cook something for them.
No, an international call. I don't know who is it, so I will recommend.
They want you to cook dinner for them tonight.
Eventually. Today I want to call about pizza. I'm not sure if someone. Well, let's go into the markets, Dale. We were talking about dollar versus CAD. This is a 12 hours time frame chart. And this is pure technicals. I'm sorry if I can't mix some fundamentals within these charts, but this is pure technical approach. We are facing bearish divergence now. The market is not, at least for me, is not on an extreme overbought condition, at least for now. But it's printing now some bearish divergence at this structure. We can call it a structure trend line, acting as a potential resistance level. So I have two targets not two targets. I have two zones where I will pay attention to these instruments for dollar versus CAD. One of them is at 1.618 extension. Let me try to grab my tool here, which will forge the bearish shark pattern at 1.618 extension. So it requires a breakout of the previous resistance. But it will remain below the major resistance above. So it will trade above or close to the 78% retracement, 1.32. So this is my level, where I will start to pay attention to dollar versus CAD if the market decides to break above this structure. There's a default projection for an inverted head and shoulder that will put the price below or close to the 88% retracement, a few points above the completion point for the shark. It will put the price below, it will respect the major resistance, which can provide also an interesting, let's say, range, to search for shorts, because for those who are searching for the best or a friendly risk-reward approach, I believe that with stops positioned above these highs, engaging the pattern with targets at 38% retracement, I believe it will offer us a nice opportunity. Dale, I'm really sorry, but I need to pass to you. Unfortunately, I will not be able to continue today. Some undesirable. Someone is ringing my door. I'm not sure if Steve is there. Or Dale.
Buddy.
Okay, I'm really sorry. I need to finish now. I'm really sorry.
All right, that's okay. All right,
Thank
everyone.
you very much. I'm sorry.
All right, Andre, have a good weekend. Steve, have a great weekend.
Thank you too. Thank you.
Base, have a great weekend. Yes, Oliver, I did start trading with candles and tape. So everyone, thank you for hanging out with us this week. Encourage people to at least take the trial. If you're bold and you want to trade a full lot, go ahead and sign up for a subscription today. And, don't just count your pips, count your blessings. And, I consider it a blessing to be part of this team. It's the best team I've ever been in, even in high school athletics. Everyone backs each other up, a lot of talent at all positions. And I'm grateful to be part of this team. They're also my friends. And guys, tell the people in your life that are important to you how much you care about them, because people aren't mind readers. And we all appreciate your patronage, your support, and your camaraderie. So my trading warrior brothers and sisters, everyone have a great weekend. Recharge your battery. And I promise we'll kill it next week. This has been a week of waiting for confirmations. Steve really put the jigsaw puzzle together, and I'm sure we're going to see some opportunities to take advantage of next week. So I'll see you then. Have a great weekend. Enjoy football. Take your wife out to dinner, and you and the kids go out and smell the roses, because trading is what we do. It's not who we are completely. And with that, adios. Thank you, team. Thank you, Face. God willing, I'll see everyone on Monday. You're welcome, Tom, Michael, everybody. Love you guys. See you later.